What took us to Ukraine was an effort to look into the boom in agricultural investing. There are a series of conferences. You can find them in New York and London and Geneva and Chicago and elsewhere, where people pitch agricultural investment as one of the next great boom sectors to put money into. And we went to Ukraine to see whether or not it really works in sort of frontier countries like the Ukraine, or places like Ethiopia or Zambia or Paraguay, newer countries that have perhaps big agricultural backgrounds but have not been at the forefront of agriculture for some time, to go see if it works. And in the case of Morgan Stanley, the answer was that for them it didn't work. They did have a history of doing physical investments. Morgan Stanley Commodities, which is the division that actually invested in this, had also bought companies that owned oil terminals, and they'd invested in real estate at the time. And really at this time, in 2006, 2007, when this investment got underway, they were branching out way beyond traditional banking investments. And one of the issues for farming was this idea that they had that this was an experiment, a potential first step into what they thought might be a multi-billion-dollar business, which in the end it didn't work out that way, but that was their thought. The Ukraine is known as having been the breadbasket of Europe for a good reason. The land is very, very good. Even when you have the big land area, you still need to deal with the fact that it's Ukraine, that it's more difficult to get fertilizer, it's more difficult to get parts to replace, to keep your tractors running. You have issues with either export controls that they had last year or this year, tariffs. So it's not, even if you have the farming go well, the actual business side, once you've grown the grains, is not easy to deal with. A problem that Morgan Stanley really had was its timing. This investment got going in the beginning of 2007. They built up their land and started farming in sort of mid to late 2007. Their first real harvest that they had for themselves was in 2008, just about the time that Lehman was getting into trouble. So by the end of 2008, they decided to abandon farming and start to look for a seller. That's much too fast in farming. Farming is not a 1, 2, 3 year return investment. You need to be committed to it, for 10 years to have a reasonable shot at making money in farming. They sold in the middle of the 2009 harvest, so again, needed to sell quickly. It was a distressed asset sale, so they sold it for much less than they put in, and at the end of the day had to walk away with a loss, and ending their dream of going into agriculture as one of their next new commodities businesses.